Good morning, everyone. This is our second try, but we welcome you to the 17th episode of Season 2 of CFO Coffee Talk, sponsored by the Florida CFO Group. The Florida CFO Group helps companies focus on three key imperatives. One is grow, the second is optimize, the third is protect. Today, we're focused on business value protection. Today's topic is insurance and risk management. As we all know, bad things happen to good companies, but companies that manage their risks and obtain the right insurance can limit the negative impacts. I'm joined today by two insurance experts. First, my partner, Tim Journy, and second, Ed Buggy of Wallace Welch Willingham, who I'll refer to as W3 Insurance. Ed Buggy is Vice President and partner at W3 Insurance and leads its property and casualty division. Ed will bring us sage advice from 20 years of experience serving Tampa Bay clients and training and speaking and coaching on insurance and risk management topics. Tim Journy recently joined the Florida CFO Group as a partner in Tampa. Tim has over 30 years of financial experience leading companies in many, many areas, including risk management, boosting efficiency of businesses, boosting their profits, and accomplishing and integrating M&A transactions. He also started as an auditor at Pete Marwick Mitchell and KPMG, and also MetLife. So with that as background, let's go ahead and get started. First of all, I'd like to start with a warm-up question. So let me ask you, Tim, as a CFO, what advice would you give in terms of best ways to work with your insurance advisors?
Thanks, Jim, and it's a pleasure to be here today. Again, we look at the insurance broker, the insurance advisor really is what we refer to him as an early warning system. Ed and his team will see the claims coming in throughout the year. They'll have an interaction with the insurance companies and get a feel for where premiums are going. And we really use our insurance advisor as a way of for us to forecast our expenses, our costs, and what the type of risk we need to be looking at. And we typically meet 2, 3, sometimes 4 times a year with our advisor. They're a partner to the team.
That's perfect. Ed, how would you tell us to work best with our insurance advisor or broker to best serve our insurance clients?
Well, thanks for having me. Appreciate you guys this morning. You know, the CFO position is uniquely qualified in an organization to provide feedback to the insurance advisor. You know, they typically in a small to medium-sized business, the CFO has either direct oversight or influence in, many different aspects of the operation. You know, they're running the accounting department. They have some input in human resources. Obviously, risk management falls on their desk. So they have a good grasp of the overall enterprise and, allows them to engage with the insurance advisor and really understand how to manage risk in the organization, where they're able to assume risk, where they need to lay off some risk to maybe an insurance program. So, the CFO is an integral part of the risk management process for the insurance advisor.
Excellent, Ed. Yeah, appreciate that. So let's start out with an important topic. As I deal with my clients, it's always a challenge to balance the sizing and the cost of insurance programs. I think if cost wasn't a consideration, there'd be a lot more desire to transfer risks. There's a bit of a tension, as there always is in things today. Ed, what are your recommendations for striking that? I'm sure you face that same tension. How do you best help your CEOs find the balance?
For sure. I mean, that's a common question that we get. How much insurance should we buy? What lines of coverage should we buy? I always start with the basic. Let's start with the contractual requirements that you have. Look at your contracts, see what your contracts say as far as the different types of coverage that you're required as a minimum basic requirement. And then you kind of build from there based on the unique nature of the risks that your business have. No two businesses are alike. Each of them may do the same thing, but they certainly have different risks. The electrician that is doing work in high-rise condos doesn't have the same risk and shouldn't buy the same coverages as the guy that's wiring residential homes. So each business is unique, and you really have to analyze the risk as it pertains to each business, as well as the financial capabilities to absorb some risk. So I think doing a top to bottom analysis, starting with the contract and working your way through the operations, really is paramount to choosing the right program.
Ed, your comment about starts with the contract that the company has
Yeah.
is right on, in that our sales department sometimes will start entering into contracts with new clients and agree to insurance coverage without many times checking back with the financial side of the organization. And there's been a couple of surprises throughout my career where I've seen that we now have a contract that we have to up the insurance costs that we had not anticipated. So that's a great point.
It happens a lot.
Yeah, that's perfect. So let me do a little bit of a shift here. Ed, I want to give you the floor for a minute. And I'd like you to give your prognostication about the insurance environment, particularly in Florida. I know you spent a lot of time focused on the commercial property market, but to be honest, my clients have struggled to justify and to quite frankly afford some of the policies. What do you see coming? Is the market going to get any better?
Well, let's start with the good news. Over the past couple of years, we saw some pressure in the market for sure. Workers' compensation, however, in the state of Florida has continued to come down. We've got a 15% overall rate reduction for 2024 on that line of coverage. We've seen cyber liability really stabilize. I think some of the requirements that the carriers put in place for their insureds, things like multi-factor authentication, endpoint detection, and so forth, have really driven down some of the claims. So that's stabilized a little. We've seen stabilization in the management liability, employment practices, directors and officers, and so forth. General liability also pretty stable. But what we've seen really is two lines of coverage that are increasingly costly in the state of Florida, and that's property and automobile liability. And the reason simply is, we tend to focus just on Florida when it comes to property, but the fact is it's a global market. And if you look at the claims that they've been paying, these insurers and the reinsurance market been paying, across the globe, they're significant, billions and billions of dollars. I just read something the other day where 2023 has been the most costly year for catastrophic claims in the property market. So we haven't seen any slowdown in rate increases in that line of coverage. In fact, I think, it's probably gotten a little bit worse, unfortunately. And then on the auto liability, it's kind of the same thing. Florida leads the nation in claims and litigation. So it's not a great environment for insurers. And, we're seeing an increase in those two areas specifically across the board. There are some things that you can do. You really have to manage risk. Like we talked about, analyze your business operations, analyze your property schedule, figure out where it makes sense to, take higher deductibles and maybe take a wind sublimit. The days of insuring, possibly insuring every dollar value of your buildings and assets, is probably not cost effective anymore.
Mm-hmm. Super. Thank you. Thank you for that advice. One area I'd like to touch on just for a minute is the area of insurance certificates. Depending upon what type of company, what type of business your company is in, having insurance certificates and solid insurance upstream in the value chain is crucially important. If you don't have that insurance, the exposure to the company can be very broad because perhaps the company is only adding a bit of the ultimate product, but is exposed to the full product liability claim or perhaps even a general liability claim. Tim, do you have clients where this is a concern, and how do your clients address it?
I do. The downstream vendors, the contracts require that they have insurance, whether it be a company or even an individual 1099 that our companies have used. They're required to have insurance, and it's a big step just to get the certificate. But as important of getting, which is a compliance factor, is take a look at the certificates to make sure they agree back to our contracts. It's one thing to have the insurance coverage behind us by others, but it's not fun when you have a supposed covered risk and look back and say, well, we really wasn't properly covered. Those surprises you want to avoid.
Great. Ed, what would you say a best practice is for a company regarding insurance certificates?
Well, Tim makes a great point. We talked about it earlier. The contract really drives coverage. So the first step in having a good certificate management program and a good risk transfer program is having good contracts with your downstream parties, making sure you have a sound sub-agreement. And then, adhering to the protocols of obtaining the insurance certificates that match, the subcontract agreement or your vendor agreements that you have with the downstream parties. I think oftentimes, people get the certificate and they just put it in the file and okay, everything's good. But the other caveat to that is really training your staff on what to look for in the insurance certificate. The contractors do a pretty good job of this, looking at the certificate, looking at the subcontract agreement, making sure that they marry up well. If you look at additional insured endorsements, many blanket endorsements across the policy spectrum, you'll see this. They say if required by written agreement. So if you don't have it in your written agreement, just because you have a certificate that affords coverage or seems to afford coverage, doesn't necessarily mean that you have the coverage. So good contracts, making sure that you have the proper certificates, and then training your staff to review them is vitally important.
Great advice. Great advice. One last additional topic I wanted to touch on was cyber insurance. Cyber insurance is very much in the press today. We're always being attacked whenever we're on the net, and so everyone has that concern. Tim, do you see more of an emphasis on cyber risk management and insurance with your clients?
We really do, and this is the risk that keeps people up at night. You don't know where it's going to come from. And how it happens, and that we do we spend dollars on training, protection, but it just takes one person clicking on something that they didn't think was a problem, and all of a sudden you're dealing with a cyber problem. This is the one area. Again, I try to be frugal in my insurance spend. This is the one area that I don't mind overspending on if I have to, just to sleep at night.
Absolutely. Ed, how let's assume we bought a cyber policy as a company. How does the company then ensure that it gets maximum benefit out of that cyber policy?
Well, I think to Tim's point, the cyber insurance policy is one aspect of the risk management process for, minimizing cyber risk. I think, the market's stabilized a little bit, like we talked about earlier. The carriers, several years ago, pre-COVID, started requiring, more protocols in place, multi-factor authentication, endpoint detection. But I think the most important thing you can do to Tim's point, is really train your staff.
Right.
Most things happen because somebody clicked on a link, right? It's human error that exposes a business to cyber risk. So training your employees, testing your employees, and making sure that you have sound risk management practices regarding your cyber exposure is key. And then, having a good cyber partner and a cyber policy in place is also helpful, because, I think most people don't realize how expensive things can get. If your system's down, or if you have a ransomware attack and multiple files of your clients are exposed, it can get very costly, and having a good insurance policy and a good cyber carrier partner in there to help you navigate that process is key to minimizing the overall cost.
Super. Thank you. Thanks. Okay. So as we wrap up, first of all, I want to thank both of you for your participation Ed Buggy at Wallace Welch and Willingham can be reached at ebuggy@w3ins.com. And of course, you can reach either Tim or myself through the Florida CFO Group website. We look forward to engaging with you. Speaking of engaging, Tim, can you give us an engaging quote to leave the audience with?
Sure. Good insurance does not protect you against bad risks. And this is where the Florida CFO Group, I think, can come into play in that we got over 30 partners. We focus in risk management, and companies can utilize our skills to take a look at what they've got going on and then advise them.
Great. Ed?
I think engage is a great word. I would challenge everyone, even in their personal lives, to engage in the risk management process, to really understand how their business operates, where their exposures lie, and then have poignant conversations with their insurance advisor about setting up the policy platform, and also where they can manage risk outside of insurance. Insurance is one aspect of the process, but there has to be other protocols in place really to maximize the reduction in claims and your total cost of risk.
Super, thank you. And I'm going to finish by just saying every company owner, manager should know what bad things can happen in their business and how likely those things are, and get prepared. Prepare to protect the business value. That's the key. And thank you very much. Thank you to all of our audience. We wish you a healthy and happy holiday season, and look forward to another web stream next week. Take care. Bye.
Thank you, guys.